Well, I'm impressed. There are a lot more people here to hear about accounting than I thought there would be. And let me start by saying this photograph to me is very representative of lawyers. And the reason is because you really are caught between having to understand accounting and law. And you'd like to be over here in law, but unfortunately the bar requires that you also be over here in accounting. And as a result of that, you're kind of pulled. And for some of you, you're doing it on your own. For some of you, you have outsourced your accounting work. And yet, you really need to understand what it is and what it means. So, this is actually who I am because I'm more than an accountant. I do have an accounting firm, started 9 years ago, and we work exclusively with law firms. I'm also a hiker, I'm a national speaker, I'm an avid reader, and I'm also a Rotarian. Our agenda, we're going to talk about utilization rate, realization rate, and collection rates. What they are not, how to calculate each one, and what factors affect those calculations. We've heard a lot, and if you have read the trend report over the last couple years, the report gives you all sorts of statistics on what these rates are. And if you've listened to George give any of his presentations, he'll tell you, where they should be. I want to get down to the meats and the bones of it. Exactly how are these calculated and what's going to affect them? I'm going to ask a rhetorical question. I don't want anybody to raise their hand, okay? And that is, do you run your firm off of your profit and loss statement? Because if you do, you are missing some of the most key information about your firms. And I would propose to you not to forget your profit and loss, but there are a lot of other factors that you really need to be looking at and understanding. And the utilization rate, the realization rate, and your collection rates are part of that. These should be, you should know what these are for your firm. Not only for you, but if you have staff, you should know what some of they are for your staff as well. So, we're going to dive right on in. We're going to start with the utilization rate. Utilization rate measures the amount of billable time worked. Now, let's consider this. How many people work an 8-hour day? I didn't expect too many hands to go up. Okay? The numbers in the trend report assume an 8-hour day. If you work more than an 8-hour day, then that needs to actually be a consideration that you factor in. If, on the other hand, you have of counsel which work less than an 8-hour day, a 4-hour day, if you have support staff that's on a part-time basis, those are all factors that can be entered into this calculation. All right? So when we talk about the calculation, what I also want you to think about is it's a very customizable measurement based on how you operate within your firm. The utilization rate does not measure revenue. This revenue does not factor into this at all. Okay, so let's look at this. Now, the calculation itself, how did we get it? Well, first of all, we have what period of time do we actually want to be looking at? Do we want to look at it based on a week? Do we want to look at it based on a month? Do we want to look at it based on a couple months or at the end of the year? What period of time? That's the first thing that you have to decide when you calculate a utilization rate. In this case, the assumption was a month. Now, if you do a month, are you actually going to count the number of days that there are, workable days? What about those Saturdays that you do some work? Are you going to consider those? Or are those just things that you do on the side? Because the utilization rate is how much time you truly spend, or a support staff member actually spends. So in this case, we're going to use 172. It's based on a little over 8 hours a day for a month. Now, of that, how many of those hours are billable hours worked? In other words, of those hours, how many of those hours or how much of that time could you associate to a specific client? Were you working on a case for a particular client? That's what we mean by billable hours. In this case, I chose 56. The math is pretty straightforward. It's just division. And you then have a utilization rate that would be 32.5%. Is it good? If you listen to George, it's not real good. You have those missing hours. So look at it a different way. If you work 10 hours a day, that means you're only billing less than 3.5 hours. So the question becomes, what are you doing with those additional hours that you're working that you cannot attribute to time on a client's case? And that's another whole discussion, but it's well worth understanding where your time has actually been spent and what you are doing with your time. Are you worrying about some kind of advertising? Are you working on your website? Are you doing your accounting? Are you going to the bank to deposit your checks? What are you spending that time doing? Because clearly, you're not spending it on billable hours. So, a utilization rate can be calculated for any period of time. If you currently do not work with the utilization rate, I suggest you look at it by the month. It at least gives you a benchmark. And very honestly, you want a benchmark for yourself. The Trends Report is a wonderful place to start. But what I'm also going to say is, my experience has been based on the type of law you are practicing, the utilization rates vary. So to stand up here and say the benchmark is, I would argue that you really want to understand what your norm is. And your norm is only going to be discovered by calculating your utilization rate. By employee. Now, yes, you should do it for yourself, but you should also do it for each member of your staff, whoever is working for you. Whether they are full-time or part-time, you really should know how productive they are. How much time are they spending? And then as soon as I say that, I'm also going to say, if you have someone in your firm or office that is responsible for answering the phone, going through the mail, doing those sort of activities, that needs to be part of your consideration. You obviously would not expect their utilization rate to be the same as maybe your paralegal is or your legal secretary is, okay? And the other is you can do this for a specific client. Now, the reason that I tell you this is if you are using flat fee billing, there's a tendency with people who do flat fee billing to say, you know, I do flat fee billing, it's okay. How do you know if your rates are right for flat fee? If you're not doing a calculation that's letting you know how much time you're spending, how do you know? You may be undercharging. You may be leaving money on the table. So regardless of how you are billing, you really need to know your utilization rate. The next one we're going to talk about is your realization rate. I'm also going to say that this is also referred to as a billing realization rate. And the reason that I say that is there are several very good articles written, and it's referred to both ways. And this is the difference between the billable time and what the client was invoiced. We don't know anything about that, do we? Everything that had a client's name associated with it is what went on the invoice and got billed to the client, right? Okay, so your realization rate is tied to revenue because it's directly tied to the billable time. So how do we calculate your realization rate? Your 132 billable hours worked. Now, those are the actual hours that you logged with that client's name associated with it. And again, if you do it by a client, then that's one particular client. If you do it generally, then it's all of your clients. And then we have how many hours actually were billed. So, in this case, your realization rate would be 83.3%. So the question then becomes, if you had 132 hours that were associated with a specific client and you only billed 110, where did those other 22 hours go? So they go a variety of different places, okay? Number one is you potentially write them off. You look at the invoice for a particular client and you go, ooh, I can't charge them that much. That's not within our contractual agreement. Or, oh, wait a second, I'm billing them, and so is my staff for the same activity. Oh, wait a second, maybe that shouldn't be 5 hours. Maybe that should have only been 4 hours. So we've got lots of different ways that we've got billable hours worked, but the hours that end up on the bill are not the same number. you also want to understand those. You want to make sure that you do understand exactly why you're writing them off. Because what you want to do in this process is also learn how you are billing. What are you doing? Realization rates can be calculated for any period of time, by employee, and for a specific client, or generally all billed clients. Again, if you do flat fee billing and you've done your utilization rates, I would be looking at when you calculated that flat fee, you calculated it based on an estimation of how much time it was going to spend you to do something. How much time did it in fact cost you? Okay? You want to actually know these. Now, what I actually want to do is, I want to do a couple calculation examples, because I just want to run through them. Here's your criteria. 250 hours were worked in a month, 194 were billable, 160 hours were actually invoiced to the client. In this case, the realization rate would be the 160 invoiced hours divided by the 194 billable hours. That would give you a realization rate of 82.5%. Okay, so let's kind of pull it apart. 250 hours are worked in a month. Is that important? No, it has nothing to do with your realization rate. The realization rate does not consider the number of hours worked. Remember all those missing hours? Those don't count anywhere in your realization rate. And that's one of the reasons why it's so important that you have your realization rate and as well as your utilization rate, okay? Utilization does consider all those hours that you actually worked. Realization is only discussing the billable hours. So if you're trying to look at a realization rate without looking at the total number of hours that you worked, you're missing hours that you're actually spending working. So let's go back to our example. The 250 hours worked in a month for your realization rate has no bearing. 194 were client billable hours. Okay, so client billable hours, what actually affects those numbers? Where the billable hours go, that's your time is not documented. How many people work and don't document the time? Because we did it, yeah, that was it, you know? So we're not always good about billing time when we're actually working. We're going to just run in and take care of one thing that shouldn't take more than 15 minutes. And 90 minutes later, we're still sitting there. Okay? So first of all, not documenting the time. If we're going to rely on these numbers to understand where our time is going and where our revenue is coming from, we need to document all of our time. Time is inaccurately estimated. Here's the other one. Oh, I forgot. How long was that telephone call? Oh, it wasn't that long. It was probably not more than about, 15 minutes. There's a lot to be said for looking, if you have a VoIP system, there's a lot to be said at looking at that report at the end of the month and seeing how long your calls are relative to how long you've billed them for. Okay? It's an awareness. Just be aware of the patterns that you are doing. Are you estimating your time? How can you get in the habit of not estimating, but very honestly in Clio, actually starting the little clock? Your phone can be used the same way. The app can be used the same way. If you're not documenting your time, get in the habit of documenting your time. If you have staff, you need to be encouraging them to be documenting their time. They're documenting the time of, I got to work and I left work. That's not helping you. You need to know what's happening between those comings and goings. And you need to know not just the billable hours on your clients, but what else are they doing? And is that the most efficient way of doing it? Okay, so let's go back to our example. Now we're going to look at the 160 hours that were actually invoiced to the client. Okay? What can affect the number of invoiced hours to the client? Okay, so I'm going to give you about 20 seconds to think about that one. Oh, I got some squirmers. Oh, yeah, you know exactly how those numbers on the invoice. Time is not put on the invoice by choice. Okay? This is where you've decided that the invoice is too high, or, well, the client's probably going to give me pushback on that. Well, it probably shouldn't have taken me that long. Well, two of us doubled up on that. I can't bill them twice for the same activity. The other one, okay, I'm an accountant. I see what you guys do. I know what you do. Okay? We have access to all of our clients' Clio accounts. I really know what you do. And I'm here to tell you there are two pet peeves that I can't stand, and you're going to hear both of them. You came to hear an accountant's perspective. You're going to hear both of them. One of them, time is discounted on the invoice. Why? You did the work. Why are you discounting it? Was it not valuable? If it wasn't valuable, why'd you do it? This one only peeves me this much. The next one that we're going to discuss peeves me this much. I'm just warning you, okay? I'm just giving you a little heads up there. You're discounting your invoice. When you signed a letter of engagement with them, was that one of the things? And I'm going to discount your invoice 10%, 15%, 20%. As I said, my questions tend to be rhetorical. Okay, the next thing I want to talk about is your collection rates. These are also called collection realization rates. So, your collection rate measures the amount of build time that is paid. Okay, now I'm going to go back and I'm going to summarize for a minute. We talked about utilization rates. Okay? What were utilization rates? This is not rhetorical. What were utilization rates? Correct. Okay? Then we did utilization rates. Do you see how this funnel is getting smaller and smaller and smaller? Is really what I want you to realize. Okay? Utilization rates were all the billable client hours over all the hours that you worked. And then we kind of came down to your realization rates. And now we're in your collection rates. So the amount of build time that is paid. What should this optimally be? 100%. The collection rate, revenue collected over what was billed, so your build time. Now, I want you to think about something for a minute. Collection rates do not have a time factor. Notice that in that equation, there is nothing that says that it was the revenue that you collected within 60 days, within 90 days. So how the period of time that you are actually calculating this rate for affects what the percentage is. So if you are willing to wait 60, 90, 120, 180, okay, we're at half a year now. Now, I don't know about you, I'm not willing to wait. Really? 6 months? And you're going to factor that into your collection rate so that you would have a high collection rate? No, you need to be realistic. What are your terms? And do you hold your clients responsible for the terms that are outlined in your letter of engagement? Because you should, and those should be the terms that you're calculating your collection rate based on. Does that make sense? Okay, I got a lot of people that you're either sound asleep and still looking straight ahead. That's pretty good. I mean, I really need you to understand that your collection rate is one of the 3 calculations that can be distorted because the longer you go out, the better your collection rate is going to appear. But what did it cost you to wait 5, 6, 7 months to get paid? Correct. That's exactly what it is. It's kind of like that term, legal accounting. You know, when you're talking to lawyers, it makes a lot of sense. When people call our firm that are non-lawyers, And they go, you do legal accounting? I'm like, yeah, it's law firm accounting. Okay, why the money collected does not equal the amount billed. Okay, you're about to hear number 2. I'm warning you right now. This is pet peeve number 2, and it sends me through the roof. The invoice was discounted after it was sent. In other words, you sent an invoice. Your client then called you and said, I don't want to pay it. And your response was, well, if I discounted 25%, will you pay it? Did you discount the work you did for him by 25%? No, you did the work, people. You did the work. Why are you discounting it? Was it in agreement with your letter of engagement? Yes. Was your client aware of what your fees were? I would hope so. Now, was it probably scary when they got an invoice because you didn't invoice for 60, 90, or 100 days? Yeah, I'm sure it was scary. I'm sure it was very scary. Oh yeah, that's right. You don't like to invoice because you have to do that on Saturday morning, and that's your family time, and so then you're spending 4 or 5 or 6 hours doing your invoice. Okay. Your collection rate speaks to your systems, okay? You really need to look at your systems. How frequently are you billing? We have clients that bill every 2 weeks because they tend to have large cases, not a lot, but large cases. So there are no surprises. There are no $100,000 bills that the client is surprised by. This is, you got to look at it from both sides here. You want to get paid in a reasonable length of time for all of the work that you did. Your client doesn't want any surprises. Your client wants to be able to know what's coming in more or less. So, what's your invoicing policy? And how are you doing that efficiently? We were thrilled when Clio came out with their payment plan, because for some of our clients, it made a huge difference. It was actually then became part of their engagement letter as an option, right off the bat. We offer it as a payment plan. They didn't wait until somebody called to say, I can't pay that invoice. Right in the letter of engagement, they said, we are willing to discuss payment plans with you. They didn't lay it out what it was. They didn't predetermine what it was, but they gave the client the option in the initial agreement where the client could then say, can you tell me a little bit about these payment plans? And they could move forward from there. What are you doing? Seriously. How many people practice in a small town or relatively small town? Okay, what are you doing when you discount a client's invoice after you've sent it? You don't think that they sat there talking to their buddy and saying, yeah, I called Joe and told him that I wasn't paying that invoice and he gave me a 25% discount. What's going to happen next time you do some work for Joe? I hope there's not a Joe in this room. I'm sorry if there is. What have you just done for yourself? okay? Make sure that you have provided options to start with. Give them the ability starting to know, these are my terms, this is what I expect payment to be, and here are your payment options. Your payment options are, we can do a payment plan, or we invoice every 2 weeks with payment expected within whatever your time period is. 30 days? Really? Good gosh, look at your utility bill. They don't even give you 30 days anymore. They want it in 20 now. Collection rates have more to do with your processes than anything. And you need to know what your collection rate is. And if it's less than 100%, I'm asking you, please review your process. Review your letter of engagement. Is it perfectly clear what your terms are? Is it perfectly clear what your invoicing cycles are? Have you laid out options? We all want options. I mean, that's human nature. Don't tell me I have one option. If you went out there to lunch and they had one option, okay, this is it, you're getting a hot dog. You'd be pretty disappointed. Okay? All right. The other is, you do actually have times when clients will not pay, and you choose to write it off. Understand those. Understand why. I'm not saying that there are not circumstances where that's perfectly reasonable and logical, but you need to understand it. By and large, most of you do not like to discuss money. You like to collect it, but you don't want to discuss it. Okay. So, I want to talk about the 3 things that we just covered, and I want to talk about 3 other things that I really, and the 6 of them together, I would encourage you to look at on a monthly basis. The 3 rates we just covered was the utilization rate, and again, this is the, you start at the funnel, which is real big. This is billable hours versus available hours or hours worked. And be honest with yourself. Don't allow yourself to do that 15 minutes on Saturday morning that turned into 90 minutes and not write it down. Because you're only fooling yourself. And really, you talk about burnout, you talk about frustration, you talk about how much time you're spending in your firm. Get a handle on just exactly how much you are doing. I recently talked to a firm where one of the partners handed me the most beautiful Excel spreadsheet that I think I've ever seen someone hand me. And I said, wow, when do you do this? And he said, oh, that's what I do Saturdays. And I said, so you spend all day Saturday doing this? And he said, yep. And I said, I didn't see that documented in Clio. And he goes, oh no, that wasn't law work. And I said, yeah, but that's still your time working in your practice. He literally was only booking the time in Clio that he was working on cases. You need to track all your time. You need to truly understand how you're spending your time. Realization rates. Hours billed over your billable hours worked. And we talked about where those could actually go. And then we have your collection rate. All of these numbers, they're just numbers. They're percentages. It's a simple division. But it's like anything else. The quality of the information going in is going to drastically affect the quality of the information going out. These are important numbers for running your firm from. You should know for yourself as well as any support staff that you have. Whether it's of counsel, whether it's an associate, whether it's a paralegal, whether it's your, admin person. You really should know where the time is going. And Clio gives you that ability as long as you track it. Now, the other 3 reports that you should be looking at every month are your profit and loss, your balance sheet, and your accounts receivable. If you have accounts receivable issue, you better be looking at your collections rate. Because the nice thing about accounts receivable report, what does it say? 30, 60, 90, depending upon what software you're using, 30, 60, 90, over 90. All right? How many people owe you money? There's some very good reports in Clio where you can actually look at it. One of them is part of their WIP report, where it's actually going to show you what's your accounts receivable, and then what's your work in process that hasn't been billed yet. Your balance sheet. What I'm going to say about the balance sheet, because we're not going to spend time on the balance sheet, that's like, for some of you that have heard me before, that's like a 60-minute presentation in itself as a balance sheet. But what I am going to say is, most people look at a profit and loss, and they look at the bottom line as if that's the money that they made. As a matter of fact, we typically handle 2 to 3 calls a month of firms that feel like somebody's embezzled money from them, because they look at the bottom of their profit and loss and they see a number that is not reflected in their checkbook. And they feel like somebody's walked out with their money. What I will say is, if you use a credit card to pay any of your expenses, any of them, it's not going to show up on your profit and loss as those expenses were deferred. It's going to show up as if they've been paid. It's only your balance sheet that's going to show that that money is still owed on a credit card. So if you're looking at your profit and loss statement, you need to be very, very careful as to whether or not those expenses have in fact been paid. The same thing I'm going to say about your income line. You need to be very, very careful about whether or not that revenue or that income has in fact been received. Because if you're looking at your profit and loss statement and the revenue has not been received and those expenses on there have not yet been paid, that profit and loss will give you a very distorted view of your firm and where you're standing financially. Okay? And if you made it this far, You did better than this guy. But we do have about 12 minutes for questions. Okay, she's got a microphone so that everybody can hear, if you don't mind.
I just had a question about whether there's any kind of benchmarks we should be shooting for on any of these utilization, realization, collection rates. I know you said you kind of look at what you've done, but is there sort of an industry standard that we should be trying to achieve?
So here's what I'm going to say. The Trends Report does have industry-wide standards, yes. But I'm also going to tell you the area of law that you practice. The Trends Report does not break it down by area of law. And so there are not standards by area of law. That's why it becomes very important for you to look at what you've done. You know, if you are in an association, I would really encourage, you know, family law is one that they anonymously submit it's self-reporting as to what they are so that other people can get a feel for where they're falling within that. But be really careful when you look at industry-wide benchmarks because the area of law makes a big difference. If you are dealing directly with the consumer versus corporate law, those are huge variances between those. And if you're doing any law for government, that's another huge variance. And they tend to all get grouped together with benchmarking.
Thank you.
For those of us that have practices where a lot, or as in my case, a majority of my cases are contingency fee contracts, is it still possible to calculate these benchmarks
Absolutely.
we went over? And I'm sure that's a whole nother class, but can you give any tips on that?
Sure. You would still calculate your utilization rates exactly the way that these are done. Absolutely. Now, your realization rate, you know, you're looking at it a little bit differently because you already know, you know, if you win the case, what that contingency amount is going to be. But yes, you still do have to do it. And you're right, that's another whole discussion, which is very different. But yes, you do need to be doing these. The biggest thing is your collection rate is really going to fall off. You would look at your collection rate would be done very, very differently, and it would be based on the number of cases that you won versus the number of cases that you didn't, and the time allocated to each of those. But yes, the first two you most definitely could.
I'm curious about your rhetorical question. I have several of my attorneys that will, when I look at the bills, they've reduced the rates. And I can't get and understand that. And I get that you're asking rhetorical questions. It seems like to me when I go to them, the next month I'll find out that they've just not billed or done a non-bill instead of just reducing rates. How do you address that? Is it a training thing? Do you, is it punitive? How is that dealt with in the firms that you work with?
So really, are these of counsel or associates? Okay. So really the way that we address it is we actually will do a utilization on those individual people so that we can see exactly, you know, and some of this is going to be your compensation structure as well. So it's one of the reasons that it's rhetorical, because if you have associates that are salaried where at the end of the year they have to bill so many hours, you know, that whole compensation scale needs to be broken down so that you're not looking at it just on an annual basis, but you're looking at it on a monthly basis. And I would be doing it through a utilization. Okay, this is how many hours that you actually were, you know, working. and this is what you build and what your ratio is, and if we apply that to your 1,700 hours a year, or, whatever, your billing criteria are for your associates, it gives them the information in a very different perspective. This invoice is a very personal thing to them. And the thing is that their relationship with you and the requirements is less personal. And I know that sounds real awkward, but it really is, because it's sort of like, I can make that up next month. This is the here and now, and this is the person I just worked with. So I really would rely on your utilization rates and look at them as a percentage relative to your expectation of the billing of 1,700 hours a year, or whatever that is. Does that answer your question? Give you some idea?
In addition to the P&L, the balance sheet, and the accounts receivable, if you can produce a cash flow report, would that be something you would recommend?
I'm sorry, I missed.
Cash flow report, would that?
Yes, I do. What I will say is most of the statements of cash flow or cash flow statements are not geared towards legal firms. And so you can get very bogged down in the equity section of it, depending upon how the partner payment structure is. And that's why if your accountant is used to working with law firms, they will modify that, quote, standard statement of cash flow or cash flow statement, which would be a much more valuable tool. But when you have guaranteed payments to partners and things like that, it distorts the whole statement. And therefore, typically I don't say this is something you need to get from your accountant, because it's going to be bogged down with a lot of anomalies in many cases.
Quick question on the best way in Clio to track the hours worked that aren't for a matter. So, for instance, when you're doing the payrolls, or you're doing the accounting work.
Right. So, your time tracking gives you the ability to track time. You can identify how you want to track time. Okay, so for each timekeeper. And I don't think we take enough advantage of being able to say administrative work, or, bookkeeping work, or whatever it is that you're wanting to track. And you need to do that, because just to throw those missing hours into one lump sum really doesn't help you. Because in some cases, you may be the only person that can do that. And in other cases, you still need to track. For instance, even if you outsourced your bookkeeping work, you as, the, managing partner, or, the owner of the firm, or whatever, you still need to spend time looking at those. I mean, you can't just blindly say, oh, they're really good. Yeah, we're really good, but we're relying on you to look at those, okay? So you do need to take advantage of that in Clio and actually break that out, as well as your other timekeepers that are doing it.
My question is, do you think Clio can replace QuickBooks, assuming you have a firm where money goes out either via check, wire, or credit card, and money comes in wire, check, cash, and through Clio Pay? So I guess what I find us doing is that we have to track our credit card expenses, and we have to track we have reports in Clio, we have the credit card reports, and then we have the QuickBooks also, and then it becomes just a giant mess when we hand that over to the accountant at the end of the year.
Right. So what I'm going to say is Clio is not a general ledger. Sorry, that's accountantese. But it's not a general ledger. So in other words, you can do things in Clio that you could never be able to do in a QuickBooks. file. And it's a matter of, you can delete things in Clio that you shouldn't be deleting. And I talk to the developers about this all the time. I would not use Clio alone for your accounting. Now, what I will say is, I bet when we take over an account for somebody, we probably 9 times out of 10, the integration between Clio and QuickBooks is not set up correctly because QuickBooks has not been set up correctly. Okay? And very honestly, I'm a huge supporter of Clio support. And if you can call Clio support and get an accountant on the phone, let me know what number you called. Because that's not their job. So when they actually help you with the integration, they can't help you with the QuickBooks side of it. So the integration is set up, but if the QuickBooks hasn't been set up correctly to accept it, you do have a big mess. And that is true.
We have time for one more question.
Hi. At our law firm, we have people tracking, or our attorneys are tracking their time spent on admin. They're also separately tracking hours spent for marketing, where they go to conferences, they're meeting with clients, where we're not billing a client. It could be an existing client or not. Would you recommend a metric to measure maybe their billable hours versus the hours they spend marketing, or is there something we could do to kind of gauge if that's a worthy use of their time?
Sure. And that's exactly what, so there is a term called ROI, return on investment. And, you know, whenever you go to a conference, there has to be a return. Now, it could be an educational return. It could be, you know, a contact. You know, you had the opportunity to make contacts with some people. It could be, you know, it can be a lot of different things. But there has to be, before they go, there has to be an idea of the expectations of what you expect them to come out with, okay? So, yes, that's how you're actually going to measure whether or not, I really cringe when I see contracts that say you will go to 3 conferences a year, because it's sort of like, what's the objective? You know, you can't just send somebody to a conference and say, come back and report on what you learned. You need to have measurable, what are the expectations that they are going to. So when you say marketing, okay, that could be any number of things. That can be a lot of things. So what was it? Did you need, you know, a new web developer? Did you, you know, do you need a new IT company that's going to manage it? You know, what are those marketing criteria, which is why they're going? And those need to be identified before somebody goes. And then it does become a measurable, and yes, it should be, because if that's part of the expectations for that, you know, member of the team, yeah, then yes, it should be part of it. Thank you very much. I appreciate it.
Awesome. Thanks so much, Gale. And thanks so much, everyone. We'll kick back up in 30 minutes.